Ladies and gentlemen, welcome back to another video. I'm your host, the Dividend Aristocrat, and today I want to take a look at two of my monthly dividend paying companies and see how much they paid me at the start of this year and how much they're paying me now. If you do enjoy this type of content, consider subscribing to the channel. I'm on my way to 2K and I have a lot of videos planned for 2025 that I think you guys will really like. Now I want to keep this video brief and focus on the two companies we want to take a look at today, so I'm going to skip looking at my portfolio dashboard. Now this video is going to cover both companies pretty broadly, so if you want to see a more in-depth analysis on either one of these companies, I'll pin some videos right up here where I covered them. As a reminder, this is not financial advice and I'm just merely sharing my opinions on this channel. So jumping right into my dividend calendar, the two companies I am referring to are Agree Realty Corporation, ticker symbol ADC, and Realty Income Corporation, ticker symbol O. Now the reason this calendar looks a little weird is because I have less holdings in my Roth IRA, but I also decided to hide the rest of the holdings for now since I have yet to cover them in a video. Now since both ADC and O pay a very high starting dividend yield and they're both paying out in the form of unqualified dividends, I decided I want to put them into my Roth IRA instead of my regular taxable account. This way I can take advantage of my Roth IRA tax advantages and this money can grow tax-free regardless of how much dividend income I am receiving. Now it would not be the end of the world to put this into my taxable account. I know a lot of people that prefer to do it that way as well, and that's totally okay, but for me I prefer not taking on that tax implication. I prefer to keep it in my Roth IRA. Now before we jump into the financial metrics of both these companies, let's just take a look at my dividend calendar. And I know it's my first time doing this kind of video for these companies, but since they pay monthly dividend income, I think it'd be a really good idea to take a look at how it's grown throughout the year and how dividend increases and reinvesting dividends have helped me grow this dividend by itself. Now this year might not be the best scenario to use for this example since I actually added a lot of capital throughout the year into these positions, but I want to repeat this experiment at the end of next year and we'll see how far we've gotten by then. So looking at this year's performance alone, we can see that in January I received $0 from Agree Realty Corporation. That's because I had yet to start a position, or maybe in January is when I was starting my position first out in ADC. Following that, I received 49 cents in February, 247 in March, and 347 in April. Now what I do want to mention is, although this looks like very quick dividend growth, the reason this happened so quickly is because I kept adding more capital into position. Now I think here in May is when I finally stopped adding capital, so 503 was my final dividend before I stopped doing any more reinvestments into this position. Now from May until December, the only activity I had for Agree Realty was reinvesting those dividends, and of course the dividend increases that did happen from the company increasing its dividend throughout the year. So from May until October, we can see there was only about a 2% increase per month in the amount I was receiving from dividends. And that's just from reinvesting my own dividends back into Agree Realty Corporation. But from October to November, we can see a much bigger jump of 8 cents. And that's because the company announced a dividend increase in that month. Following that, from November to December, we were back to normal at 2 cents per month, which is my dividends being reinvested back and buying me a little small portion of the company every time. In total this year, I finished off the year with earning $47.32 worth of dividend income from ADC, and all of that was reinvested back into the company, which bought me about half a share of ADC. Now taking a look at O, I think this one's more interesting because it is a much larger position of mine. We can see that in January I was paid out $5.18, but since I was still building out this position, it increased quickly for the following months. February was $8.28, March was $10.63, April was $11.73, and May was $12.82. Now, based on what we can see here, the last time I invested any more money into Realty Income was in May because from there it jumped from $12.82 to $14.20 in June. And then after that, it only jumped by very small amounts, about 10 cents per month. So from June to July, I guess I reinvested the money and there was a dividend increase. So that was a 10-cent increase in my total dividend income for that month. And then 7 cents in August and another 6 cents in October. Now from September to October, there was one more dividend increase, which meant my amount went up by 9 cents that month to $14.52. And then November, I had $14.58, so no dividend increases. And December was $14.65, so probably no dividend increases as well. Now recently, Realty Income Corporation did announce another dividend increase. So for January, I expect a slightly larger bump than usual, but this is going to be pretty similar going forward for the rest of 2025. Now in total, I did make $149.69 from the Realty Income dividends, and all that was reinvested back into Realty Income to buy me over 2 shares of this company. Now the larger the position, the faster you can see that compounding effect happen, especially if the dividends are high, but over time I expect both these positions to compound nicely as the dividends continue to get reinvested back into the same holdings. Now I think 2025 will be much more interesting of an example to look at than 2024 because we'll really see how those reinvested dividends have an effect over time without adding any more capital into those positions. Now what I want to do now is hop into stock intent, and I'll be using the software tool throughout the video to look at both Realty Income and Agree Realty Corporation's financial metrics and performance. Now if you guys are interested in stock intent and want to give it a try for yourself, I'll leave my affiliate link down in the pinned comment below. If you use that link, you'll be able to get a 7-day free trial for stock content, so you can give it a try for yourself, and it's a great way to support the channel. And right here, you can add any sort of watch list you want. So I created one sample one called Main, just trying it out, but I also created one for REITs, and we can see here all the REITs I have listed right there. So these are just some REITs that I've been taking a look at, but for this video, we don't really need all of them. So we can actually just go in here and delete the ones we don't want. So I'll remove Rexford Industrial Realty Incorporation, American Tower Corp, and Medical Properties Trust. Now, the first thing we can see here is the stock intent score, and we can see that ADC actually outranks Realty Income, which to me actually makes a lot of sense. I think in terms of fundamentals, Agree Realty Corporation is a much stronger company at the moment and has better future potential for growth. Now, there are a lot of different metrics on this screen, but if you want to make your own custom view, you can add a view and then add your own custom metrics to that view so you can have exactly what you want to take a look at yourself. Going into the growth tab, we can see that Realty Income is a much larger company with revenues upwards of $5 billion per year, whereas ADC only makes about $600 million per year. Now, the more interesting thing I want to take a look at here is the dividends. We can see that Realty Income pays a dividend per share of $3.12, whereas Agree Realty pays a dividend per share of $2.73, which gives them a dividend yield of 5.3% and 3.64% respectively, though I think Realty Income, with its current drop that it had this past week, is actually much closer to 6% dividend yield at the moment. Now, in terms of their 5-year dividend CAGRs, their growth rates have not been outstanding, and that's because they've had a hard time in the high interest rate environments. We have Realty Income at 2.87% CAGR over the past 5 years, and Agree Realty at about 4%, which is at least better than Realty Income. Now, if you click on Realty Income, we can open up its company page, and right now it's automatically set to the 5-year mark. Now, what I want to do is I want to set it to the 10-year time frame, so you can press the past 10 years, or if you want, you can also choose a custom date range by using this calendar right here. So in terms of their market cap, they're a very large company. You can see that their metrics in terms of price to sales and price to earnings are pretty poor, but that's because you have to use price to AFFO in order to properly evaluate these kinds of companies. Now, looking strictly at their revenue growth, we can see that it's grown pretty quickly over time. In 2022, there was a huge jump, and the same thing can be said in 2024, but Realty Income has done some major acquisitions which have helped boost up these numbers a lot. I think going forward, we can expect to see much smaller revenue growth, more similar to 2015 to 2017 kind of growth, so we'll have to see where they go from here. Now, one thing I want to highlight here is the stock price graph, and this company has had a very hard time performing in the past 10 years. The current stock price sits at $52.79, which is far below its 2020 peak of near $80 per share. Now, since 2020, the company has had a lot of dilution and it started growing more slowly, but at the same time, it's still been improving its financial metrics. Now, with the current situation with interest rates, I don't expect quick stock price appreciation anytime soon, but I think in the next couple of years, this company has a real good chance of turning around and showing some pretty good total return for its shareholders. Now, using the chart tab, there is a lot we can take a look at here, but the main thing I want to highlight is their stock buybacks and dilution, and this is not the best graph that you want to see. Over time, the weighted average shares outstanding have increased very rapidly, and with these big acquisitions, they've increased even quicker than before. Now, this is not uncommon for REITs to do. If they have any sort of acquisitions, whether it's a property or a company, they might want to increase their shares outstanding or issue more shares basically in order to raise that capital instead of having to take out a loan at higher interest rates. Now, although this does dilute the shareholder, as long as the per share metrics continue to increase, this is not that big of a deal. Now, hopefully in the next couple of years, they'll issue some less shares than they have before. I'd rather they get down their balance sheet and focus on their fundamentals before they continue to issue a large amount of shares. Now is a good point to take a look at Agree Realty Corporation. We'll do this a little bit more quickly than Realty Income. So revenue for Agree Realty is growing pretty quickly as well, and I think it's been growing a little more organically than Realty Income. I'm pretty sure they've had less acquisitions in the past couple of years than Realty Income has had. Now, their market cap is large, but it's much smaller than Realty Income's at $7.78 billion, which is not too bad at all and leaves a lot of room for growth. Now, one thing I should mention is even though Realty Income has a large market cap, it does have a lot of room for growth, especially outside the US. They're making a lot of big moves in Europe. Now, for the past 10 years, their stock price has performed much better than Realty Income's. It did as well crash in 2020 after the COVID crash, but since then it's recovered pretty nicely, and even now it's been holding its gains much better than Realty Income has over the past 2 or 3 months. Now, in terms of stock buybacks and dilution, they have been issuing a lot of outstanding shares right now, and because of that, it's raised their average shares outstanding by a significant margin. Now, like I said before, this is not uncommon, and they're just using it as leverage right now, especially with higher interest rates, but hopefully this will slow down in the future. Now, next we can hop into their investor pages and take a look at their dividend payment history. And so right here we can see Realty Income's showing for every single month that they paid out a dividend. So let's scroll down and take a look at the beginning of 2024. Realty Income was paying a dividend of 25.65 cents per month. And fast forward to now, they're paying 26.4 cents per month, which is a pretty significant increase, although much slower than they used to in previous years. Now, if you guys are interested in taking a look at all their monthly history, you can keep scrolling down. They basically have every single year since IPO in this website. Now, luckily, Agree Realty has made theirs available as well, so we can see their monthly dividends right here. And they actually didn't always used to pay a monthly dividend. If we scroll down far enough, they used to pay a quarterly dividend up until 2021, where I think they copied Realty Income because they probably want some of their investors to invest in Agree Realty as well. And so they went to a monthly dividend format, which I really like. Now, what you can really see here clearly is that their dividend has grown faster in recent years than Realty Income's has. And if we go to 2024, we can see that they started off the year with a dividend of 24.7 cents per month. And fast forward to now, they're at 25.3 cents per month. So they're quickly catching up to Realty Income. Now, Agree Realty does trade at a higher stock price than Realty Income, so their dividend yield is still significantly lower than Realty Income's. If you're looking for a consistent REIT that pays monthly dividends and has a high starting yield, I think Realty Income would be a better investment for you. But if you are looking for something that has a better chance at outperforming in terms of total return and better dividend growth over the long run, then I think Agree Realty might be something to consider. Quickly taking a look at their performance on Google Finance, we can see that Realty Income over the past year is still up pretty nicely, and from its bottom it was actually up at some point almost 40%, but since then it has dropped a little bit. Now it's up 27.8% from its bottom, but it's still not too bad at all for its 1 year performance. And if you were adding more during this dip right here, you probably are sitting pretty nicely on your total return. Now for me, I own a large enough position to not want to purchase more at these prices. Even though it has had a bit of a pullback, it's not quite significant enough for me to consider adding more at this time. Now, Realty Income, on the other hand, is a bit of a different story. It actually bottomed out pretty aggressively as well around the same time as ADC, and then it climbed pretty quickly as well, up almost 25%, but since then has dropped much more significantly than Agree Realty Corporation. It might present a buying opportunity for those of you who haven't opened up a position in the company just yet. Right now, it is down over 18% from its peak, and that's because the last quarter's earnings report was not that good. Investors were expecting better, but the company did not perform as well as they thought it would, and that combined with higher for longer interest rates is also just not a good thing for Realty Income. Taking a look at both my holdings within these companies, we can see here that my cost basis for Realty Income was at $52.32, and the current price sits a little bit above that at $52.79. Now, the reason it's highlighted in red is because I have conditional formatting to tell me when the current stock price is very close to my buy price in case I want to add more into the position. Now, I did buy 53 shares with a Realty Income, and with dividends being reinvested back into the company, I currently sit at 55.852 shares with an amount invested of $2,773 and a current value for the position of $2,948. Now, since I already hold such a large position of Realty Income, I don't really want to be adding more into the position. It's already very overweight as is, but I do like the company a lot. If the stock price continues to dip down, I'll really have to reevaluate this situation. I might be adding more shares into the company regardless. Now, a lot of times during these videos, I get comments telling me that Realty Income has grown very poorly over the past 10 years, so why would I invest in it? And I do understand that sentiment completely. However, what you have to consider is that if interest rates go down, there's a good chance that these REITs will go up a lot in price over the next couple of years. Now, as long as interest rates remain high, this can be a very difficult environment for these companies, especially since some of their tenants are closing down their stores. Now, in terms of Agree Realty, we can see here that my cost basis is at $56.50, and the current price is sitting a decent bit above that at $70.17. Now, after the bottom, Agree Realty was able to increase its stock price more aggressively than Realty Income, and it's since held that gain much better than Realty Income was able to. Now, in total, I purchased 20 shares, and with dividends reinvested, I sit at 20.704 shares with my amount invested at $1,130, or a current value of $1,452. Now, if I were to go back, I would have invested a little bit less into Realty Income and instead more into Agree Realty. But at the time, I was investing into Realty Income before I found out about Agree Realty, and so I'd already made such a large position of that. In general, I'd rather keep my Realty Income position a little larger than ADC just because I find that it's a little bit more of a stable company, and that's what I want in my retirement account. Now, in terms of total return, Agree Realty is up 28.56%, including dividend reinvestments being calculated in, and Realty Income is up 6.32%. Now, in total, my dividend income from Realty Income was $160, and from Agree Realty was $47.32, with an annual payout going forward of $62 per year for Agree Realty and $174 per year for Realty Income. The current yield sits about 5.93% for Realty Income, 4.28% for Agree Realty. The yield on cost for Agree is 5.31%, and my yield on cost for Realty Income is 5.98%. As always, that does bring us to the end of today's video. I really hope you guys enjoyed taking a look at my holdings in both Realty Income and Agree Realty and taking a look at their financial metrics and their dividend performance over time. Now, if you guys do want to see more of these types of videos where I talk about my dividend income throughout the year, how it's increased from the first quarter of the year all the way to the last quarter, let me know down in the comments below. And if you have any specific stocks in mind you want to see that I hold, let me know down below as well. Also, I would love to know if you guys hold any REITs in your portfolio, and if you do, which ones specifically do you like to hold? If you guys haven't yet checked out last week's video where I talk about my recent purchase into Uber and my recent Tesla sales, check out this video right here. And if you guys want to see 3 stocks I'm looking to buy in 2025 and 3 that I'm looking to sell, check out this video right here. Remember, the best time to invest was 10 years ago. The second best time is today. I want to thank every single one of you guys for watching, and I will see you in the next one.